If you see in that crash, say 10% crash is there, then that much amount of money is gone, right? So where it is going? And say 10% correction has happened, then 461 lakh crore market capitalization, 10% of that is around 46 lakh crore. So 46 lakh crore, if that correction happens, is gone. So where does it go? Hello everyone. The topic today is when the market falls, when the stock market falls, where does that money vanish? If you see in that crash, say 10% crash is there, then that much amount of money is gone, right? So where it is going? So our topic today is all about that. If you see, the market capitalization of stocks listed in NSE is around 461 lakh crore. So if you call it a correction, say 10% correction has happened, then 461 lakh crore market capitalization, 10% of that is around 46 lakh crore. So 46 lakh crore, if that correction happens, is gone. So where does it go? To explain that, I need to get into an analogy. Now say the current market price, the MRP of say eco column rice is 65 rupees per kg. That's the selling price of per kg eco column rice, well in that case a kg of rice, in all the supermarkets currently. Now a few supermarkets in an area decides to reduce the price from MRP of 65 rupees to 50 rupees so that their sale increases and more people come and buy from their supermarket, and even though their buying price is say something around 40 rupees, still they get 10 rupees per kg profit. So they are okay selling with that 50 rupees. Now what happens? The market price of 65 has fallen to 50 because if a group of people or a group of supermarkets in that area is selling at 50, others will also be forced to sell it at 50. Otherwise, everyone will come to this supermarket and the others will not be able to sell that at a higher rate of 65 rupees, the earlier MRP of 65 rupees. Now say we have 1 lakh bags, each of 1 kg available in that total area. So that's the total inventory of rice available. So earlier 65 rupees per kg means 65 lakh is the value of the 1 lakh bags available in that area. Now they have reduced to 50 rupees means 50 lakh is the total value of 1 lakh bags. So the 65 lakh has fallen to 50 lakhs means 15 lakhs just vanished out of thin air. But if you see that 15 lakhs never existed. Now coming back from our analogy into the stock market. So let us all consider that 65 rupees is the price of that stock, 50 rupees is the current market price of that stock. So let us get back from rice to a stock, particular stock, say ABC stock. And we had 1 lakh, instead of that 1 lakh bags, we'll consider 1 lakh number of shares is the available number of shares outstanding in the market. So market capitalization is nothing but number of shares into current market price of that share. So that has fallen from 65 lakhs to 50 lakhs. So 15 lakhs of market capitalization gone. So if you see, I would say 65 rupees was the hope value. The hope value of that stock. Now that hope value of 65 fell from 65 to 50 rupees. This is something which I would call as repricing of hope. It is a guess that the price was 65 and people bought the stock at 65. It is end of the day a demand supply game. There was also a video which I have done how the stock market works. So it is all about demand supply game. So if you see, markets are not built on certain prices, but it's built on confidence. So in the market, confidence comes and goes. If the confidence is high, the prices go up. And if the confidence is low, then the prices go low. Because if the confidence is low, people sell the stocks and the prices fall. And if the confidence is high, the people buys the stocks and the prices go up. So now the question is it a real loss? Not really. So coming back to that stock which somebody has bought at 65 rupees, then it fell to 50 rupees. Now if you hold it long and the fundamentals are correct, and if it is a fundamentally strong quality stock, then the price can go up to 65, even it can go up to 80 or 100. So if you realize the loss, then it's a loss. Otherwise, it is never a loss. It's a paper loss, as I always say. So if you want to call it, it is just a short-term loss. Now, if you have a big correction in the market, then the stocks fell, then that particular stock also fell from 65 to say 30 rupees, then that's a big loss. So it may take long time to recover also. Events like war, COVID, during these events, the stock price may fall very drastically and it may take time. So COVID recovery was fast, in 4 months it recovered. During Great Depression, it took very long time. So it depends. So if you see, while the market crash, is the complete money vanished? No. The stock was actually mispriced, I would say. The expectation of the market always varies, changes. So actually there is no destruction of cash. Simply putting it, value is a guess. Value of a stock is a mere guess. Now we can call it a valuation. People value the company. So as Warren Buffett told, price is what you pay and value is what you get. And that value is perceived. You can use valuation methods to arrive at that value, but still it's a perceived value, a guess by a particular analyst or the investor who is buying that stock. And if you see market crashes, or well, in that case, market transactions are all about emotions. You are not buying a goods or services actually in the market. It's all about people and their emotions. The future hope of the people about that particular stock or a group of stocks. That's all what happens in the market. Sometimes they get it wrong and the money is lost. And sometimes they get it right, then you make money in the stock market. So hope this concept is clear for you. See you in the next video. Till then, happy investing.